Today is November 4th, and the Chicago Cubs are world champions. This is the ADM Investor Services Weekly Market Wrap-Up. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, ADMIS's Vice President of Grain Research, and Alan Bush, the Senior Financial Economist at ADMIS. Steve, let's start with the grain markets. The grains have backed away from last week's highs. Are we still in a trading range?
I think we are. I think that we have this record supply and record demand, and I think that as the markets move higher, we get into farmer selling this record supply, and as we move down, the markets, I think, tend to see less farmer selling and a pickup in demand. October, we tended to trade demand. And I think as we move into November, get closer to the crop report, we're trading supply. And I think that this whole scheme of record supply and record demand certainly affected company stock like ADM that shot up after the earnings report and talked about the dynamics of the grain markets.
At long last, next Tuesday is Election Day here in the U.S. How will the grains react to the election?
I think right now we're seeing people liquidate out of positions. I think they're concerned about having any risk exposure at all, whether it's long or short. And so you're seeing beans kind of back off from long positions, wheat backing off from short positions. And I just think people, at least in the grains, want to go into the report with less risk.
Last week you mentioned that there's too much rain in Argentina. Can you update the viewers in regard to that statement and the South American crop in general?
Well, I think that right now the plantings in Argentina of corn are running behind normal. They've barely started with the soybeans, but the weather outlook is much more favorable. Now, the only thing that we have to watch is that a few weather meteorologists, long-term, like 30-day outlooks, suggest that Argentina is going to start drying out. Now, if we get into a La Nina pattern, Argentina is supposed to be dry during their summer months. Brazil, you've got corn plantings ahead of normal. You've got soybean plantings ahead of normal. And with the corn plantings of their first crop ahead of normal, they could actually come in and plant more corn and things like that. So we're looking for, right now, big crops out of South America.
And finally, Steve, we have a USDA crop report next week as well. What are you expecting from this report, and how much weight does the USDA report carry this time of year?
This could be a very big report because normally the crops don't change very much in November from October. Half a bushel in beans, maybe a bushel in corn. But in this particular instance, the market's going in long beans, and we saw some private estimates raising the crop pretty dramatic. So you could not only see a bigger soybean crop, you could also see a bigger carryout, and you could flush out some of the longs that we have in the marketplace. If it doesn't happen, people might come rushing back in from the long side. So we would expect a pretty violent reaction to the report in the soybean market. Corn and wheat still has a weight of too much supply, and so the report may not be as important for corn and wheat, but we'll just see if the funds want to stay short after the report.
Alan, no real surprise from the Fed this week, leaving rates unchanged. However, I am surprised to see that you're holding a Cubs baseball in your hand after last week's comment about being a Sox fan.
Well, that just goes to show that us economists are very versatile, and this is actually how you throw a curveball. Your fingers need to be on the inside of the laces. But anyway, a little more on baseball later.
So the Fed left rates unchanged on Wednesday. They did say, however, that the case for higher rates has strengthened, with the majority of officials indicating they anticipate an increase before the end of 2016. What are your thoughts on a December rate hike?
Well, it still looks like a December rate hike is still in the cards, although even with the employment numbers today coming in a bit on the soft side, it still looks like there will be a decision to raise at the December meeting. Right now, financial futures markets are indicating there's a 71% chance of that rate rise. My analysis suggests maybe only 50%, but it looks like a rate hike is coming either in December or early next year.
And what type of things throughout the next month would lend the Fed to back away from a rate hike versus, make it further certain that we might see one?
If the economy were to weaken, that would definitely be a reason for the Fed not to raise rates. If the dollar were to get too strong, that would be a reason also for the Fed to hold off. The idea is that if the dollar gets too strong, it could do some damage to our export business.
And what is the effect for the U.S. dollar in light of the Fed keeping interest rates on hold this week?
There was a very minimal chance that the Fed could raise at this Wednesday's meeting. Of course, the Fed was on hold, so that was a slightly bearish factor. The dollar has come off a little bit in the last week or so. So we're thinking that the dollar will probably just trade steady over the near term, probably over the next month or so.
And regardless of what happens with the election?
The election could actually be a bit bearish for the dollar if there's a Trump win. So I think the best policy would be to stand aside for a while, at least till after the election, and take another look at it.
Turning to the interest rates, there was a slight recovery for the 30-year bond this week as some commodities, especially crude oil prices, declined. What is the outlook for the 30-year T-bond futures now?
The bonds still look lower, and it appears to me that this is a trend that will last all this year and well into next year. And even if the economy does improve, of course that would be a negative on the bonds, but just a steady economy could cause the bonds to work lower if inflation starts to increase, as we think it will. So in other words, even if the economy just holds up okay, but inflation picks up, we will still have a bear market in the bond market.
Stock market, Alan, still looks like we're stuck in a fairly tight range. Will this change after next week's election is out of the way? I mean, is the election holding up, any real movement in the Dow and the S&P 500?
It absolutely is. It absolutely is. Traders are liquidating longs ahead of the election, and rightly so, to limit risk. But I think that once the election is out of the way, that it will be the low interest rate environment that takes over, as it always does, and that will propel stock index futures to new highs for the move in all of the major indices, possibly in the first half of next year.
Guys, besides the Chicago Cubs, the world champion Chicago Cubs, what's hot and what's not?
Well, again, I think everything's on hold until after the election. And then I think everything will fall into place after the election. Historically, grains tend to rally this time of year as we put some kind of weather premium in for South America. And then down the road, maybe put some kind of premium into the summer weather pattern here in the United States if we have a La Nina. Right now, what's not hot is soybean oil. Some people think that it's reached its peak, and that the news that rallied soybean and canola probably has been filtered into the marketplace. And then we'll see if wheat rallies because of the dryness in the southern U.S. plains.
Same question to me?
Yes.
The answer there is what's hot is the Australian dollar. Interest rates in Australia have been rising, so we think that the Australian dollar will continue to advance against the U.S. dollar. What's not hot is the Canadian dollar, which has been hurt by declining crude oil prices. So putting those two together, I think the best trade is to be long the Australian dollar, short the Canadian dollar. The spread has moved at least a couple hundred points in favor of the Aussie dollar, and I think there's at least another 100, 150 left in that spread. So be long Australian, short Canadian. That's a spread that will continue to work, I think, for a very long time.
Well, I know, Steve, you have to get over to the parade. So remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about the brokerage services offered at ADMIS or would like to open a trading account, please visit www.admis.com.